Good evening, dear colleagues. As always, it's Sunday, and this is the ForexTimes project. I am Dan Strelkov, and today we will examine the likely movement of trading instruments for the upcoming trading week. Dear colleagues, a small announcement. Today we will be without the data from the US Commodity Futures Trading Commission reports because July 4th was a holiday in the US, Independence Day, and the reports were not published on Friday evening. Therefore, we will not have data on the collective intent of professional market participants to move trading instruments in one direction or another. Today, we will exclusively focus on option contracts and Ralph Elliott's wave theory data. As always, I invite you to ForexTimes, where you will find unique forecasts based on data from the Chicago Mercantile Exchange and the Ralph Elliott's waves. You will find trading signals and consultations. Come, you can always communicate with me, and I will try to answer you at any time. Well, let's get started with the euro dollar. I remind you that for several weeks in a row, I have been talking about the probable formation of a triangle and consequently the working out of the triangle in an upward movement, which is happening right now. Dear colleagues, if you have already entered the market, please hold your positions for a very long time because the duration of the movement is likely to be around 1,500 pips. The upward movement might be less, but don't even think about closing if the price goes 200, 300, or 400 pips. On the contrary, dear colleagues, during corrections of the trading instrument, try to buy more. As for the target levels, our nearest target levels, which I have mentioned many times, are where we have large clusters of option contracts, particularly those worth $209 million and $210 million. Professional participants of the Chicago Mercantile Exchange decided not to keep us in suspense and publish the reports on Thursday. The data shows $422 million and $220 million, totaling $642 million. Professionals have added more option contracts. Therefore, dear colleagues, the target levels are 10,965 and 10,9990. Yes, 10,965 and 10,9990 are our nearest target levels for the euro. For those who are not yet in the euro market, let's consider how this could be done. There are not many options. The first wave has probably passed, followed by the second. This cannot be the third and fourth wave because, as you know, in a classic impulse movement, the fourth wave cannot engulf the maximum of the first wave. This only happens in the initial diagonal triangle, where the rule is that the fourth wave must engulf the maximum of the first wave. In our case, it is not a diagonal triangle, so the third wave is likely simply extended. 1, 2, 3, 4, 5. We have wave number 3, a correction in wave number 4, and now we are heading into the fifth wave on Monday, Tuesday, or maybe the first half of Wednesday. Thus, the impulse ends with 1, 2, 3, 4, 5, and then I hope for a significant corrective movement from the 50%, 61.8% Fibonacci retracement range. You can look for your buy entries. Dear colleagues, buy entries can also be sought after the formation of the corrective movement. Wait for the impulse, a small correction, and enter with a buy stop order. I suggest this approach for those who have not entered the market. For those who have entered the market, do the same, because I repeat, if I am right, this upward movement will be very strong and significant. Therefore, your task is to buy here, then buy here, buy somewhere here, and buy again. Well, for the upcoming trading week, I have outlined the plan and indicated the target levels clearly defined by professionals from Chicago. Gold is basically the same. Several times in a row on Sundays, I have talked about the probable formation of a triangle. The triangle has most likely formed, and now we are heading towards updating the maximum value. Our target level for the upcoming trading week is 2450. This is the target level, but it doesn't mean you should close your trades if you have already entered the market with a buy on this trading instrument at 24.50. No, 24.50 is our target level based on monthly call option contracts where the maximum interest is marked. I call this the hedge level. When we reach it, the price will most likely stop or go into correction. But this is not the level where you should fully close your trades if you are currently in the market with a buy on this trading instrument. Let's consider the situation for those who haven't entered the gold market. There is a fairly high probability of two scenarios. The first scenario is that the five-wave structure is already complete, similar to the euro. We expect a correction and look for entries either from the 50%, 61.8% Fibonacci retracement range, or wait for an impulse, a small correction, and enter with a buy stop order. But there is another scenario, which is that the third wave, like in the euro, could be extended. 1, 2, 3, 4, for example, and this will be a BC. This structure might form, and only after that will there be a correction, and then we can consider market entries. I prefer the first scenario because the strongest resistance range is right here where I am showing you now. I suspect that just on Monday or Tuesday, there will be a slight extension of the fifth wave, after which we will see a correction and can enter the market again with a buy on this trading instrument. Therefore, dear colleagues, we are considering gold exclusively for buying at the moment. A few weeks ago, actually, I will tell you exactly how many, 1, 2, 3, 4 or 5 weeks ago, I wrote in the ForexTimes community that when the price was around here, I really liked the range of 2405 to 407 as the target range for this trading instrument. After that, the trading instrument updated the minimum value and then headed upwards. I am almost certain that we will reach this 2405 to 407 range. And moreover, I think we will even go on to update the maximum values. Dear colleagues, join the ForexTimes community and you will always know the target levels and ranges that the trading instrument will aim for a month and a half, or even 2 months in advance. Imagine if you are told a month and a half, or 2 in advance where the trading instrument will go. I think in principle, you wouldn't need much more. Knowing the target and methods of reaching this target is invaluable. However, it is essential to understand proper capital management and, of course, to work exclusively with stop loss levels. Let's move on to the S&P 500 index. The S&P 500 is currently an instrument for selling. Thinking about buying is not advisable at the moment. However, let's see where the strongest resistance range is for making decisions. At the moment, the range is between 5,600 and 5,670 according to the monthly option contracts. If we look at the weekly option contracts, sorry, my terminal is a bit slow. Here we go. The range is between 5,642 and 5,665. So for both weekly and monthly option contracts, this is the strongest resistance range for this trading instrument. Therefore, dear colleagues, if on the upcoming Monday, Tuesday, or the first half of Wednesday, this trading instrument reaches this range and forms a bearish pattern or an impulse from this range, you can enter the market for selling. After the impulse, use a sell stop order for entry. The reason is that looking at the expectations of professionals and the accumulation of option contracts, I have repeatedly said that the accumulation of option contracts at the top has nearly exhausted itself. There are billions of dollars worth of option contracts at the bottom. Professionals are expecting something unfavorable to happen with the S&P 500, particularly with the largest American companies, also known as the Magnificent Seven, such as Apple, Amazon, and Microsoft. They expect that the reports will be very bad, causing the index to plummet. Alternatively, very good data might be released for the US dollar, leading investors to buy the American currency and move away from investing in this index. So, dear colleagues, from an investment perspective, it is better to sell this index. Gold is aiming upwards. If you are in the market, it is better to stay in it for now. If you are not, wait for a correction, which might start either soon or from the strongest resistance range, and then enter the market. As for the euro, we continue to look exclusively upwards. We have a specific target range that the price is currently heading towards, and any good corrective movement gives us an excellent opportunity to enter the market and make a profit. Thank you very much for being with me today. This was Dan Strelkov with the Forex Times project. Join the Forex Times community. You will never regret it. That's all for today. See you next time.